listen, tune in, turn on. It's time to get started here this morning. It's Don Kaufman. It's April 23rd, 2024. Just about 4 minutes to go to the cash open here. Of course, on this Tuesday morning, SPOOs, they're a running. So we had a bid yesterday exactly to where we would have anticipated. That is the expected move for the trading session, which I'll discuss in a little bit of extent here this morning. And today we've got a little bit of a bid back under us and some earnings behind it as well. And what's pretty critical about today is, well, simply put, all the earnings that have come out, the stocks are predominantly higher. And of course, at this point, everybody's buying in. That's it. It's the sell side activity is over. However, the volatility, even though it's come down, is not subsiding all that much. Specifically this morning, the volatility is not subsiding all that much. Look, we are all well aware, and we're looking for that kind of quintessential rip your face off rally, and you got it to some degree. I think that yesterday left a little bit to be desired in terms of the rip your face off rally, and I'll tell you exactly why. Because your rip your face off rally faded pretty hard in that last hour of trade. I mean, I actually was even kind of asking myself right after this little down move yesterday whether we were actually even going to hold up on the entire trading session, meaning that the S&Ps at one point yesterday were up 60 handles. It almost looked like a full-fledged reversal. So you're coming into a trading session this morning. Again, there's no question that volatility is down to some degree. The advanced decline line, pretty much everywhere you look this morning in terms of sectors, look at the bids and offers. This is where, I'm serious, don't use the charts. Always look at the bid and offers in the morning. Obviously, you're going to see the financials there a little bit bid. Look at the energy sector this morning. Energy sector, it's kind of flat this morning. And the reason I'm pointing out energy is because it's kind of the only odd product out. And then we have the usual suspects. NVIDIA, it has a bid under it. It's at the upper edge of the expected move. Tesla, which has earnings today, has a bid under it. Google's relatively flat. Amazon, mildly higher. I'm shocked. I really am shocked that Apple is flat this morning. Some rough news again out of Apple, but it's all been priced in apparently. And Microsoft has a bid. So the bid this morning, it's there. It's not like, yeah, it's kind of everywhere, but it's not nearly as strong in the monsters of tech, which in fact could even leave some upside initially to the marketplace. But well, we'll talk about the upper edge of the expected move for the day in terms of trade. But we're coming into a session that, once again, volatility, like VIX is down. Vol futures are a little bit guarded here this morning. The bond market, there's not a huge amount going on in the bond market. It definitely quieted down the last few days inside of the bond market after what has been a just kind of decimation to the downside. So come into the cash open. Look, you still have to anticipate fast, kind of disconnected two-sided trade. If you just reside to the fact that that's it, that was the whole sell-off over here, I think you're going to do yourself a quite the little disservice. This sell side activity needed a bounce. We got a bounce. Now we're going to be looking forward. What? That thing is always early. Anyway, let's come to today's cash open. Very strong positive advanced decline line, strong ticks into the bell. So the advanced decline line, it is stellar. Where are our ticks? Ticks this morning are going to come out. They should be screaming strong. But okay, when I say that, again, conversation piece is going to be some of the big tech stocks. Interesting. The ticks are not screaming strong. Not screaming strong. We are scattered and broken. AD line, though, is also not quite as what I would have expected here. I'm just looking down the list, some of the usual suspects. A lot of this is earnings related. It's the movers on the screen. Again, anticipate some two-sided trade early on. Sorry, I'm turning the, I got to turn the air conditioning on. It's hot already in here. It's hot. It gets very hot. There we go. So with that being said, there are some trades that I do have in mind this morning. One of them being inside of the financials and the XLF. I was waiting for the sell side activity, the bid back. Look, for those of you, I was making fun of this yesterday too. It's the 50% retracement. Is it 50% retracement? I don't know, but it sure as hell looks that way, doesn't it? Nevertheless, okay, we are still on the bid. I'm watching out of the corner of my eye here, Nasdaq in the first couple of seconds of trade. There's no question again that somebody's saying Tasty's having issues. No, Tasty all good. Tasty all good. It's you. It's definitely not me. Tasty good. Tasty usually good. If they have problems, you usually see the problems immediately on here. Anyway, Apple. Okay, Apple's actually going to put a little bit of drag specific into the NQ on today's session. The NQ though, right now, okay, on a rip, and it is on a rip specifically because of NVIDIA. Right out of the gate this morning, there's definitely call buying going on in NVIDIA, definitely some call buying going on in Meta early on, but again, man, this is flimsy at best. It's nominal in here. Let's go look at NVIDIA really quick. NVIDIA's got some size trading, no question about it. Look at this. The number of calls being bought up there, traded at the ask or above is absolutely huge in here. So there's going to be a bid under NVIDIA until this actually calms down just a little bit. So again, NVIDIA having a decent bounce. Here's an underlying where, I mean, I know what you're thinking. It cannot be kept down. This is exactly the kind of bounces, though, that you need to see. There's nothing like, there's nothing, interesting about this. This is why we like scream at you, don't short into the hole. Now, okay, we've actually come back up a little bit. Now, do I want to short into NVIDIA? Not necessarily. Again, I personally think the better way to trade NVIDIA, I use the QQQ as a proxy for it. Obviously, the Qs can differentiate quite considerably, but if NVIDIA is going to see some sell side activity, there's no question. There's just no question that the Qs are going to come down with it. And we've seen that a lot in the last week of trade. So again, I am trading right now, okay, at the with, I should say, the assumption that the marketplace has got a bid back under it and will likely fade, if not today, in the next few trading sessions. I am not, okay, going to attempt, perfect timing for when the fade happens. That is, again, some sell side activity. It's a bid back. We fade. I'm not going to try to attempt to step out in the S&Ps and fade it, but I will do it with defined risk expressly inside of XLF. I think that this would be a tough trade. The markets are actually falling here a little bit. Might be a little bit of a tough trade to get on. I don't want to force it. So what I'm going to do, okay, look, just hands off the mouse. I'm going to let this marketplace open and settle in for 15 to 20 minutes before I would try to execute into XLF. Again, even at fear of missing the trade, okay, this is right now playing in the middle of traffic, and it's really hard. Like, look, the financials are staying relatively stable. In fact, the financials are even bidding up a little bit. Okay, if there's this like stabilizing factor right now into the S&Ps, it is the financials. Okay, it's definitely not tech right now. Tech's all over the place this morning. I'm getting NVIDIA in the last couple of seconds. Anyway, so I'm going to shop in out spreads, but I'm going to wait, maybe till like 7 a.m. Pacific. Okay, and that's I'm telling you guys, it's just good trading that way. In effort to kind of go into a little bit more detail when I say that, I say it's good trading. Playing in traffic in early trade can really get you in trouble. This is not, in terms of the S&Ps, this isn't settled out. If the S&Ps do sell off, so be it. There's not much I can do about that because I'd be trying to buy a put spread in the midst of a sell-off. I'm probably not going to get good fills. But when I say that I'm trying to let the market stabilize, let it stabilize. The path right now has been a little bit higher. The ticks this morning, okay, they're still positive. The advanced decline line is obviously increasing right now. So we're almost at that correlation to the upside. Quite frankly, I'd like to see higher degrees of correlation. Even if you're, it doesn't matter whether you're bullish or bearish. I like to see correlation because it increases it increases the probability of reversals on an intraday basis. So I always like that one. And ticks are starting to fade here a little bit. Coming into to Tesla, let's go take a quick glance. Tesla getting smacked again off the open. Look, it has earnings today. I might be so inclined as to take a shot at some of the earnings and earnings related trades. So I'll discuss this a little bit later in the session, but selling off actually would probably be a decent thing. We'll see what their earnings amount to. Again, this is one where, I mean, for me, I'll probably end up taking the bullish trade in here. By the way, I do have one bullish trade on. It's way out of the money. It's okay because it's a free shot. So I have a completely freebie trade on Tesla right now. So if we do get a bid back under us today, it will be glorious. Okay. Somebody was asking, how is XLK doing? I mean, look, XLK is it's another proxy for the Qs. It's very, very similar in respect to the Qs. It looks, I mean, if I can bring this up on two charts, and I will for a second. Here we go. All right. So tell me, I'm just going to go year to date on here. So yeah, it's good enough. Tell me the difference in here. I mean, there might be a percentage difference in the moves, but yeah, for the most part, I'll trade XLK once in a blue moon, but it really tends to, kind of it's wasting some time in that respect because it really is the Qs. Again, one of the things that I try to do is I just focus on simply the most liquid products. And I know people bring stuff up constantly, and I'm like, yeah, you could, like, for instance, NVIDIA. We could totally trade NVIDIA, but what a lot of people are not aware of, okay, is first of all, in NVIDIA, you're playing, okay, in an $800 product. Forget earnings for a second. It's generally speaking over a 50 vol, right? Forget about the earnings coming up because I can see the volatility jumping. Like the bid offer spreads in here a little bit more formidable. Then there's nothing wrong with, bid offer spreads being a little wider because the volatility is higher. Okay. And then we start looking at things like implied vol. And this is what raises the issue. And what I have an issue with is most people don't understand stuff like NVIDIA is going to have an inverted implied volatility skew, which embodies the idea that risk is often to the upside in there. Okay. I even saw an inverted skew yesterday, somewhat in Google. Okay. And it's in Google, but it's predominantly the skew actually bends in here, but the skew flips over around the earnings. It's actually flattened a little bit today. Been really interesting though in Google the last couple of days. And the reason I'm bringing this to your attention, look at this. The skew in here is relatively flat. It's crazy. 59 days out. The reason I'm bringing this to your attention, we haven't typically seen inverted implied volatility skews, okay, then in something like Google. We've seen it in NVIDIA's. We haven't really seen it in Apple, briefly in Microsoft. You start seeing inverted implied volatility skews though, and you gotta think twice about actually executing into there. Okay. By the way, as David was saying, XLK is much higher percentage move than Apple and Microsoft and QQQ. Yeah, and you're paying for that. So if I go back to XLK for a second, okay, you're paying for the fact that it has what you perceive to be bigger percentage moves, and where you're really going to pay, okay, is the bid offer spreads. It's one of the reasons I really don't like it. I should have made that even more clear. So you're trading a product with a 24 vol. Just bear with me. This is 24 days out. It's 24 vol. Go to the QQQ 24 days out. This has a 21 vol. The difference is, so there's a little bit less volatility, just a hair less volatility in the Qs, but the bid offer spreads are penny wide markets. You tell me what's the better product. Okay. It's, if you're going to play this game, you got to do everything right. I mean, you do. And what you think a stock is going to do or what you think a particular product is going to do shouldn't actually make the differentiating factor of what you're going to trade. Okay. What you trade should always be the most liquid thing. That may fit a certain candlestick pattern. That may fit, this. But people constantly ask me about scanning, okay, on thinkorswim. This scan does a lot. I mean, you can look for an incredible number of variables instantaneously in this wide array of stocks. But I'm going to tell you right now, if you're going to scan, you should only scan like, 10 or 12 stocks. They scan the crap that you're always trading. If you're trading stuff that's off the beaten path, you have no chance these days, none. The bid offer spreads in less liquid products now, it's not just formidable, it's a non-starter. I mean, I even look at stuff like Costco recently, and I mentioned this. Even Costco, its bid offer spreads are not horrific, given the fact that it's a $700 product. Okay, but I'm even calling these into question lately because the overall option order flow is so limited. Like again, 1,000 contracts in Costco. I'm gonna go back to XLK for a second, and I'm not completely ripping apart XLK because I think it does trade somewhat, but you can see right now it's gone. There's no size to it. Okay, everything right now, and I do mean everything that trading firms are doing, they are concentrating their firepower into a handful of products. Okay, and part of that concentration has to do with, okay, if you look at a product like the spiders, I'll just make a brief point. If you look at a product like the spiders, there's daily expirations in here. It takes an immense amount of server capacity and bandwidth to make markets in here. So partially it's the fault of the exchanges allowed us to have daily expirations. The technology behind it literally can barely hold on. That's something that people don't think about. But if you add an expiration every single day, or you start adding weeklies, how many more calculations does your trading application have to make? Better yet, how many more messages per second? Okay, it's exponentially greater every single expiration that you add. And it's in my opinion, okay, it's not necessarily the only answer, but in my opinion, the reason that you're seeing a concentration of liquidity, it's not just because NVIDIA is the coolest stock ever, yada, yada, yada. It actually had to do with technology and the limitations of it. And we started concentrating liquidity, and then they started concentrating firepower. And all of a sudden you get, some crap that looks like this. Okay. It's an interesting, for me, that's my theory and I'm sticking with it. But it's an interesting thing to think about because there's less stuff trading, but there's more firepower, more concentration in one little area. And you have to trade now in that area. And I'm pretty adamant about that. So with that being said, as I said, we're going to kind of let things settle in. The S&Ps all of a sudden crack to some highs. It's actually right where we were here. It's exactly where we were yesterday. This looks like it's a little bit of a touchy area in the S&Ps, even though we're cracking highs. Trade right now, okay, I do not mind saying trade is very fast, very disconnected feeling, okay, sketchy, if you will. Okay, we are absolutely sketchy trade. And when I say sketchy trade, it's one of the hallmarks, of course, of heavier volatility. You're getting 4 or 5 point moves, excuse me, in the S&Ps, okay, every couple of seconds here. Now, granted, I do know that some news just broke. I mean, 645, what was it? Here you go. PMI composite. That shouldn't have made much of an impact. It absolutely did. Like, look at that thing. PMI composite just did that. Richmond Fed, oh no, it's 7 o'clock. Okay, so the S&Ps right now are on a rip. This is exactly why I said don't rush to think anything is going to happen. Okay, we're just playing in traffic right now. I'm just looking here. Oh, the PMI composite, the number was really bad, really bad. Interesting. So it's really bad. So, man, that's good. Look what the bonds just did. Yay, the world is falling apart. Love it. I mean, that's basically what we just denoted over here. We are rallying right now on very, very poor, okay, purchasing managers, crappy surveys. But the bonds, that is a magnificently large move inside of the bond product. Now, here's where we could see a quick snap and reversal back. So bear with me on this thought. That that news just came out. The volatility fading, but just nominally. Like this doesn't look right now. The volatility is still, prefacing that we could reverse in an instant on this. That's the one thing I would say, be mindful of. You see the S&P's up 32. Speaking of the S&P's up 32, I think it's incredibly important at this point in the morning to go look at the daily expected move. Obviously, today is the 23rd. The expected move is 32 bucks. Take a look, 32 bucks. We're home. Okay. And we're basically sitting already where we expected movement to be. Moreover, yesterday, I think yesterday had a, well, this is yesterday's data, so I apologize here, but yesterday we had a $43 move higher, okay? And the expected move yesterday was basically 40 some odd dollars. So just be aware of how efficient it's been. I'm looking back the previous day, okay? You had a $44 expected move. Just to show you, the next day we had a $43.37 expected, actual move. So we hit spot on to the expected move yesterday. I wanted to make that point because in the middle, I think in the middle of what we perceive to be like volatility, in the middle of what you perceive to be volatility is almost like a calming like effect inside of the S&Ps because it's hitting exactly what it was, determined to hit. Speaking of which, just to bring up, look how close we are at this point. Now this I'm taking into consideration as well. Look how close we are already to the upper edge. Again, the upper edge of an expected move. We're just shy of $20 away from the upper edge of the expected move. Okay, and the day has just begun. Ooh, now that, people, that could happen. I mean, I almost have to assume at this point, and this is again why I use this stuff, I almost have to assume at this point that we're coming home. Home being, what is that, 5064, we'll call it. Almost have to assume that that's going to be the target for the day. That is a nice big number ahead of us. It would, though, not only would we be trading outside of the daily expected move, we'd already hit the upper edge of the expected move on a Tuesday before some of the big earnings. Can we get there? Maybe. Okay. I'm not sure I'm going to wait, though, much longer for execution inside of the financials. Okay. I'm going to shop this trade right now, and I am going to step out. I'm going to do 31 days out. I'm going to step out in front of a little bit of traffic over here. 85 cents is pretty reasonable. So it's a product trading right at 41. It's very easy to wrap 31 days out, wrap the 42.40. Okay, it should be trading for right around 85 cents, and it is. Okay, it's a fairly easy fill inside of the XLF. I'm going to create a duplicate order. I'm going to come in at 84 cents and work it there for a moment. And I will absolutely post this, create a duplicate order. I'm going to work another one at 85 just to see if I can fill it at 85. Okay. And for those of you kind of playing the at-home game, okay, you can even work one at 86 if you're so inclined. I may send this one out at 86. This is in, out, spread. All right. So we can start to work those orders to some degree. That would be lovely. I'm going to try to work one here also at 86. As I said, I'm kind of playing in front of traffic here, and I can tell you right now, we hit that daily expected move. We pulled back off of it, but the ticks are still positive. Let's just let this thing come to us, right? I filled the one lot in there. You guys can kind of let me know if you're filling or not. I mean, I can tell right here just looking at volume. So I can see the volume starting to come up, but I want to make sure that people are going to get filled in there. All right. You're not front running me, Dimitri. Actually, you kind of are on that spread. So this is where you would want to go after it. And again, don't force it. Don't force the trade. You got all the time in the world. Look, you can see I'm working at 85, 84, 86. I'll come in here, by the way, once in a while, cancel, replace an order. I'll cancel, replace it, and put it right back in at the exact same price. People go, why do you do that? It moves the exchange. Sometimes it causes a fill, but I'm not concerned because I think that the S&Ps are going to come right back up and they're going to sit somewhere near that $32, $33 move. So you can see we're up 31. The financials, had a scary couple of seconds in there, but they'll rally right back up. We'll be okay. We'll get filled on this thing. We'll wait. We'll be patient. And yeah, see, I filled at 86 cents. So everybody, okay, at 86. But again, like somebody said, I had to go to 87. Don't go to 87. No, just sit, wait. There's no reason to go to 87. It'll happen. Okay. So I'm showing you that I'm picking them off, kind of one by one. So I had to fill at 85, fill at 86. Now I'm only going to take 85 or 84, or I just won't do any more today. I want to make sure though that these get out. See if we can get this thing out to everybody. All right, trying to get the in out spread out. All right, we'll leave that one there for a second. By the way, I wanted to bring up XLF again for a second on the broader chart and do show you like auto expected moves. In terms of auto expected moves, okay, we're not exactly like, on fire, but we're definitely hitting the upper edge of its expected move for today. That doesn't mean a whole lot. Like I'm just being very forthright and telling you exactly my idea. My idea is we fade, we bounce, we maybe fade again. That's it. Okay. What happens? What happens, Don, if we rally? Well, I guess you're going to lose money. I mean, that's the best you can do is play around with the bounce and fade, but you have to also be very honest with the thought that your timing in here may not be great. We could probably still come up and then fade. We'll see. Now, there'll be a fade in here. Like, don't get me wrong. Like we're going to get scared to the downside at some point here in the very near future. All right. Hopefully we can get this thing out. Yeah, the XLF catapult is doing well. Yeah, I don't mind bringing that up for just a second. Let me see if I can actually find the right account. I got accounts on accounts. I got accounts on my accounts. So the XLF side of the trade, it's up about like 50%. And this is a trade where I bought a call spread in XLF, and then I financed it by selling a call. And you go, well, where's the call you sold? The call that I sold, I closed it fully profitable. I closed the call yesterday in when the marketplace was getting a little sketchy. I closed the call for a 50% gain. So the trade that's on in here right now cannot lose money. It can only make money because I didn't pay for it. Like I literally didn't pay it all for the trade. So, the profit loss in the open's up $40. But that $40, and I don't mind saying this, it's, and by the way, this is a one lot because this is like the master account. I can't trade huge in the master account because people, we send out these trades to the catapult people, but the catapult people, okay, what do those people look like? They look like people except with catapults. Anyway, I've already covered the other side of the trade. So, you cover something and let's say that, we cover it for $100. So we've already collected $100 and then there's another 40 on top of it. So how you allocate is how you allocate depending upon, your account size and so forth. But the trade has about, about 140, 150 of P&L, which is quick for a catapult. And now I want to start shopping new catapults. And I have ideas, all kinds of ideas. Again, though, we're kind of playing in a little bit of traffic here where this marketplace, you're going to say whatever it is you want to say about it. It's fine. Okay, this marketplace is not stable right now. And yeah, I'm still looking for the fade. Okay, today's an interesting day because I'll be very honest. I would love to take a short position right here and look for the market to fade back. I would love that. Believe me, instinctually speaking, that's the kind of thing that I look for. But okay, I erring on the side of caution. I'll explain it in a minute. I'm just going to get this trade out and then we'll continue on. So we're going out, okay, and we're buying XLF. It's the May 24, 42, 40 spread, 86-cent debit. That works. I'm just going to make sure as we send this trade out. It's always a challenge to don't text in trade, people. Don't text in trade. So I'm going to send it out at 86 cents. And I'm going to come in here and I'm going to go cancel replace order. Now I'm working at 85 cents. Okay. If I fill, I would then know if I filled at 85 cents, you're guaranteed that you filled at 86 cents. And I like to do that. I've only filled 2 of them so far. I have another 2 working. And I'll route a few more thereafter. In fact, yeah, create a duplicate order here and come in. I'll come back in at 86. Okay, no fill right now, but that's the price we're going to send it at because I think that that's a reasonable price. And I'm also seeing, 400 contracts have already filled at that level. So when we do send this out, we are going to send it at 86 cents because I think it's a much more reasonable price at this point in time. So that message should be coming out momentarily. Okay, coming to a theater near you. All right, with that, look for a fill, but don't force a fill. Okay. And you can see again, I have no problem. Like, I have 2 that have filled, and I'm working 3 more. And you'll notice, like, I work them as one lots. Why not? Everybody else in the professional side does too. I don't like do like 5 and 10 lots at all anymore. I have to do that sometimes when I'm like putting on some bigger size for like auto trade stuff, but generally speaking, call me Captain One Lot. Call me Captain One Lot, and that's it's a good thing. It's a good thing. The Tesla has a little bit of a bid back under it. They like me anyway. I would need Tesla up dramatically. Meta, bearish position on Meta, but I still have 59 days left. That one's actually up slightly. We'll see how that one plays out. Anyway, I don't have a huge amount of inventory on right now. Inventory being trades. And the reason I don't have a huge amount of inventory on right now, I've closed a lot of stuff, especially the shorter term stuff, closed it profitably. Okay. Yeah, it's again, these S&Ps, and I want to clarify something for a second. I was saying this and got distracted because we were about to send out a text message. But making sure we're good to go. I'm okay to go. I'm okay to go. Anyway, I love the idea right now of fading this move. Okay. When I say fading the move, I love the idea of taking a short position right here. At the same time that I'm saying that, I'm a little nervous that we go right up here to the upper edge of the expected move. So I'm gonna back off, at least for the time being, on the idea of just trying to short this marketplace, right? Meaning, like, again, here we are trading at the 48 level. We know that the upper edge for the entire week is trading 60. There we go. We're filling at 86 cents now. So everybody's going to be filled. And the text message is out, yada, yada, yada. Okay. So what I'm thinking in here is we're probably going to rally up to here. When I say that I'm looking to fade something, I'm shopping around a little bit. Okay. I think the market has a pretty good chance of getting squirrely as the day goes on. What that basically means that it pulls back, maybe rallies. Look, I can't tell you in a trading session like this where we're going to close. I can tell you, okay, from a probability point of view, there's a pretty good probability that we hit this. We look too edgy right now. What I keep looking at this morning that I keep thinking like, oh, this is going to get this marketplace is not what you think it is. Keep looking at the volatility futures. And I always say this when the market starts to get volatile, okay, we're on a bounce right now. I perceive this as nothing more than a bounce at this point. Again, I've stated that a couple times today, but the volatility, it's not backing off with the marketplace basically at highs. Look, the marketplace is right off the highs. The volatility ain't budging. So the volatility is looking at the S&Ps, okay, as destabilized right now. The stabilizing factor would be if we actually went to the upper edge of the expected move. But I keep, again, countering and saying, I don't know if we're going to make it. This marketplace could come right back down on its head. And it's one of the reasons I'm trying to fill, which I have. I've filled 3 of them now. Okay. I'm trying to fill what I can in the XLF. Okay. Fill them if you got them, because you may not get another opportunity. And I can't, as I say, like, you're playing in traffic right now. Yeah, I can't make this thing bid back up or them fill you at a certain price. All I can tell you is that 86 cents is the right price to send this thing out. It's the right price because, for right now, it's when you route stuff at 86 cents and you don't fill, okay, and the mark is showing 87, that's a tight market. I mean, that's right on the bleeding edge. When you're not getting filled, you're doing something right. I'm picking them off though one at a time over here. I like that stuff. Let's come back to the Nasdaq for just a moment. So as I said, the Nasdaq looking a little bit edgy this morning. I am shocked about Apple. I'm back away from some of the intraday and some of the in-out spread talk for just a second. Everybody good? Everybody good. Okay, I'm okay to go. All right. Apple. If you, we'll come to some of the other tech stocks too today, but if you missed news on Apple, okay, Apple reports worst quarter for iPhone sales in China since 2020 as competition heats up. I have a completely different take on this. Okay, I do, and I'm going to say it. I'm going to say it right now. Apple, okay, very well might be losing market share in China, or that's actually what's being pitched to us by a bunch of idiots that write financial media. Okay. By the way, Jeff Bierman was sending me some Market Watch crap this morning. It is the worst written stuff now. Okay. I don't want to, if anybody works for Market Watch, I apologize. Generally speaking, it's the worst written crap I have seen in my entire career of reading anything, financial media. It's terrible, terrible. I think that this is going down. I think that the market's going to, it's that bad. Anyway, okay. And it's Dimitri, it's not AI that writes it. AI would do a much, much better job than this garbage. It is not AI. Anyway, I'm going to give you a different take on Apple. Okay. I think China, the economy is imploding over there and we don't know it yet. That is my take on why Apple and the Chinese sales are down. So I believe that the Chinese, not the stock market, because we can look at their mega caps, right? You can look at their mega caps by just pulling up FXI. It's the large caps. So we know that on a year-to-date basis, Chinese market's still actually up. It's very, very flat though in the last couple of months. But my belief is they're not, Apple is not per se just losing market share. Maybe they are losing some market share, but that the reality, okay, is that the Chinese economy is slipping dramatically. And there are hints of this everywhere you listen, okay? There's hints of it. And that's one of the reasons that kind of at this point, I'm starting to watch individual. You can look at like the Baidu's out there, okay? When I say there's hints of it, I'm making that crap up. So Baidu is down about 15%. Okay. Baba sells crap. It's down about 3%. Those are the one of the, the two, I would say, of the most notable and large market caps out there. Okay. And they can't get out of their own way on a year to date. It's just, again, that is worth noting. Okay. That it might not just be Apple. Okay. It might just be China kind of imploding a little bit and the Apple iPhone sales. So what else do I have to base on it other than Baba and Baidu, which I just showed you? Both Baidu and Alibaba are down. I would suggest that Tesla is right in the middle of this. In fact, it's Tesla that leads me to believe that Apple isn't just losing market share. Nobody's buying crap in China right now. Okay. It's probably one of the reasons that Tesla is getting pummeled, and they keep talking about the Chinese market. And there's a pricing war now going on with Tesla, okay, and Chinese manufacturers, car manufacturers over there. So this could be interesting. Would, though, the Chinese economy imploding equal a lower FXI? I'm not sure. I'm not sure. And I'm going to tell you exactly why I'm not sure. I'm not sure because the regulators in China will continue to buy the marketplace if it falls. Okay. It's one of the most heavily manipulated markets in the world. Yeah, no, anyway, for what it's worth, it's something to think about. Okay. I don't usually look at a lot of macro stuff, but this is one that I don't think enough people are looking at it the right way. Okay. And I think it's something we're going to be talking about a lot in the next few weeks. The Chinese economy, again, definitely feeling some pain, and it's coming out a little bit in Apple. But if you take a look at Apple and some of the sell side activity in here, okay, and especially recently, and I'm not just talking about the volatility, that looks a hell of a lot like, though, what Tesla's experiencing in the last couple of trading sessions. Of course, you can point to the whole market looking like that, but in large part, these two firms are directly related, okay, to sales in China not being good. Anyway, for what it's worth, how to play it right now or how to trade it, I'm gonna have to let it come to us. I'm gonna look for our opportunities in FXI. FXI is definitely a tradable product. Okay. Both Alibaba, okay, and Baidu can be traded, but FXI, when I say it's a tradable product, FXI, okay, it's got size. It's got 20,000 contracts trading on it today. Like this thing is, when I say it's tradable, it's tradable. It's it's penny wide markets through and through. It's decent. Okay. The most you're going to see is 3 and 4 cent wide, but it's penny increments in here. So I think we're good to go. Yeah. Anyway, with that, back to the S&Ps for just a moment. Okay. Just bring it up again, how close we are. I know that people want to, let's fade the S&Ps. I think it's a really not smart trade right now to fade the S&Ps. Okay. It's not smart. I wouldn't do it. And I'm not going to fade the S&Ps right now. The reason, okay, you're that close. Yeah, look, here we are trading at 50-50 in the SPX. Yeah, at 50.63. I think you have to have the assumption right now we're going to get sucked very quickly right to the upper edge of the expected move and the day is over. Okay, we're going to ride this expected move for the remainder of the day. I think that some of you shouldn't be trading on the bearish side. I think you should be trading on the bullish side right now and ride right off into the sunset of the expected move. Okay, to think anything else like this now is clearly going to be the highest probability of where we're going to go. So if we reverse over here, it's not that we can't reverse. Okay, and I wouldn't want to miss a reversal trade. I just won't trade against the probability of hitting that expected move. I think that's the one really important aspect, at least this morning, worth noting. So we're filling somewhat in the XLF. We'll come back to there. Okay, we're filling to some degree inside of the XLF. It's up 13 cents. You can see only 1,000 contracts have gone through. I can tell you right now, we're not even halfway home. It's anywhere from 2,000 to 5,000 contracts we should see on each leg of this. Anywhere from 2,000 to 5,000. It's highly variable, which always shocks me regarding how much people will trade or won't trade in a given spread. But bear with me on this thought. If we hit the upper edge of the expected move for the week, all the contracts should fill inside of the XLF. We'll be in better shape that way, but we'll see how it plays out. Yeah, Paul was saying you filled it at 86 cents. So yeah, 86 right now. I am working one at 86. If I go cancel replace, I just want you guys to see. I'm working 86 right now. I'm going to put it back in at 86. You go, why do you do that? Maybe change the exchange. Okay, let them see it again. See me. Okay. I do that all the time though. Like I'll just cancel replace. It kind of, probably puts you to the back of the line, but there's a lot of exchanges. And believe me when I say, generally speaking, okay, yes, your order goes to the open market, but it definitely touches like Citadel or Virtue's pipes before. And I was reading all this conspiracy crap on, X, Twitter, whatever the hell you call it this weekend, about how evil the market making firms are. I don't know if you guys caught that. Anyway, they were attacking Ken Griffin and so forth. Holy crap. There was not one good argument that was being made in attacking Ken Griffin, not even one. Okay. Other than he's worth $40 billion and that makes him a beep. But yeah, I actually have, I'm not supporting, Citadel. Okay. Not supporting Virtue by any stretch of the imagination. But I have a pretty good understanding of the market making side of the business. Okay. And all these people, by the way, the reason it was being talked about, okay, was it had to do with Trump media. Okay. Trump media. And it was being manipulated, damn it. It was being manipulated, okay, by people that could naked short sell. If you make markets, if you're a market maker, and I want you to think about this, if you're a market maker, you don't have to borrow stock to short it. If you're a market maker, you have to be able to short unlimited shares, okay? If you can't make markets. Like the bottom line is, would it be fair, okay, to not be able to short stock as a market maker? Like, somebody buys calls that forces you to sell calls and get long stock. But if somebody buys puts, okay, all of a sudden you're short puts, you got a short stock against it. You have to be able to get those conversions and reversals, okay, in given products. So I just think that was kind of missed a little bit in the Twitter fight. And no way in hell was I stepping into that one. Okay. People get they get crazy about the stock. I don't care what you think about the stock. I'm just talking about the market making side of the business in there. And the market making side of the business, it's hard to borrow. Okay. There's nothing for retail to borrow because it's hard to borrow or none to borrow. But on the professional side, they can short all the stock they want. Okay. And if you don't like it, don't play in the game. And if you own a company you don't like it, it's the same thing. Elon Musk, okay, the same damn thing. They don't understand, like from the market making side of the business, okay, who cares if they short the stock? Let it get pummeled, okay? If you're shorting this stock, that person is taking immeasurable amounts of risk. I say go for it. I have no problem with being long, with being short. And if you're a market maker, though, there should be unlimited shares to short. Otherwise, you wouldn't be able to make markets. Like if it were me and somebody said to me, in here, somebody said to me, and again, doesn't matter what you think about the stock, doesn't matter what you think about any of it. Okay. But whatever market that you're making, if somebody said, by the way, you're a market maker and you can't short shares, I would be like, I withdraw. And you can say that as a market maker, you can actually say, I withdraw my markets. Okay. You just hit a button, you're done, you're out. I'm out of the contest. And then the product becomes immeasurably illiquid and then no one can trade it. And then they go, what happened to the product? And then they blame Citadel, destroyed it. By the way, this has happened in the past. It has happened in the past. It started to happen on stuff like GameStop. Nobody wanted to make markets in there because people were complaining. Speaking of GameStop, that thing, I'm just still shocked that it's not completely out of business. Okay, I don't think shock's the right word. Disappointed is the right word. I'm disappointed it's not completely out of business over there. Anyway, the GameStop saga continues along with like AMC. Okay, AMC, well, maybe not so much over here. They're just fighting getting delisted. All right, so S&P is over here. It's quiet, it's boring. Again, as I said to you, this is not a time to fade the move. The move is coming home. Okay, home is so close. I'm so close. Take me home. And that is the highest probability today. So let that happen. As it happens, will get filled in the rest of the XLF trades. Now, what else am I looking at? Okay, so there's some earnings out today. Let's go to like Spotify. Spot. Okay, I am spot on. Spotify, it's ripping. Only question is in Spotify, and I actually do have the question. I didn't look at this last night. Oh, the stock was expected to move $27. Actual move 37. So it is outside its expected move. But with all due respect, it was positioning to move right to 300. It opened spot on. Okay, basically 300. So that one's a hit. This thing looks like it's going to break away to the upside. Cool. Anyway, I'm just looking at like how efficient some of this is. Okay. Ooh, somebody filled at 85 cents in the XLF. Son of a. Okay. Come on. Why are they not filling me? See, cancel replace back at 86. Okay. Do a little dance, make a little love, get down tonight. Yeah. All right. Don's getting frustrated. So that's Spotify. The next one would have been UPS. UPS, what is it doing this morning? Survey says absolutely nothing. I hate this damn thing. Back thing. It's supposed to move about $8. Okay. Actual move, it's all over the freaking place, but well inside the expected move. 83 cents of movement. Yay, golf clap for that one. What else we have? Oh, this one surprised me. PHM. Okay, that's the Pulte group. It surprised me to the upside. Okay, look at me. I'm surprised. Okay, I am. I'm actually relatively surprised over here. So PHM has got a bid under it. It had a $5 anticipation of movement. Actual move is about $4. It's maybe not done. Okay, I think you can get there, but this has ramifications to the XHB. So the XHB is going to rip today. So here's an interesting trade as well. Similarly to what I'm doing in the financials, the XHB, it didn't really bounce until today. If it gets back up to like 105, okay, in that area, 105, that might be, it's a really crappy 105. 105. Anyway, if it gets up here to that level of 105, it could be another decent bounce and fade trade. But I'm going to let this one persist for the time being. I don't think this thing has bounced nearly enough, but I was taken back a little bit by PHM. Okay, that's a decent sized move. It had me looking also at Toll Brothers this morning. Everything in the home builder sector popped. Okay, with this. By the way, as I was saying, don't fade the S&Ps. Okay, don't do anything. It's not a smart move right now. Okay, the market likes its levels, okay? No matter what you might think about levels, the single most important thing on the screen is always going to be the edges of these expected move. It doesn't matter what levels, doesn't matter about your 618s, okay? And I'm not trying to poke fun at it. I am telling you that hedging activity moves markets. Hedging activity alone. And if this is the happy place, it's got to be the highest probability. So you expect us to come up, to come over, skirt the line, do a little dance, make a little love, get down tonight, okay? Look, I wanted to fade this marketplace back here. That line stopped me from doing it, right? It stopped me from doing it. And it's a good thing I looked at it because, I would have gotten beaten up a little bit. Now, maybe we fade the market later today, but we'll see. We'll go to the edge of that expected move first and let it fly. Next one, like Pepsi came out with earnings. Okay, nobody likes me. Pepsi's down about $5. By the way, I always look at this because I'm going to start trading, some like butterflies a little bit later this week, expected move butterflies. Pepsi was supposed to move about $5. Actual move just a little bit outside, but it's been open for a while and it's slipping. It hit the edge of the expected move and slipping a little bit off of it. That's a hit. That's a hit in my book. Last one that I had up here is probably GM, General Motors. Okay, up about $1.70. Preface to move about 220. Okay, so it actually opened on the edge of the expected move and faded. I would anticipate that GM is pretty good probability of coming right back to that neighborhood. Okay, it's a good neighborhood in any regard. That's it's kind of a roundabout of some of the things I'm looking at. Let's go back to Tesla for a moment. So Tesla has a little bit of a bid under it. If I'm going to trade this, it's earnings trade. I would probably just do like a 3-day spread. Look, it has about a $15 expected move, which by the way is a pretty big expected move. But the kind of trade I would do in here is very binary. I would just do like, something like a slightly out of the money spread, like a $2 or $3 wide spread. Okay, where you risk, look, this is a $3 wide spread that you risk $1.30 to be able to make like $1.70. And it's reasonable. Like the only thing in my opinion that we can do in Tesla effectively is take a directional shot. And please understand, I'm not, okay, I'm not insinuating in here that we need to take a bullish shot. I'm more comfortable being on the bullish side of it because I was thinking like all the negative news plausible could be priced in. Maybe it's not though, and again, that's a decision when it comes to earnings. When it comes to earnings and earnings related trades, it's always going to be a little bit of a roll of a dice. And when it comes to earnings, it's about getting reps in. If you're going to trade earnings, you don't expect one earnings trade to make money. You're going to have to go out and you're going to have to do repetition. And over like, for instance, 50 earnings trades, it sounds like a lot, but it's not. But over like 50 earnings trades, or let's say 20 earnings trades to not scare you. Don't scare the children. Over 20 earnings trades, if you're risking $1.30 to maybe be able to make $1.70, and you're right, okay, over half the time, you'll make money. You'll make money. But you have to be fair and two-sided. Okay. I'm not trying to be a Tesla fanboy at all. This thing it's been freaking pummeled. It has been pummeled. I'm actually really surprised. It's down 40%. Okay. How is what's her name? Kathy Wood doing? I haven't looked at that portfolio in a long time. Okay, how is Kathy Wood doing? Oh, that is going to hurt. That is going to leave a mark. She's only down 12% in the portfolio. But think about being down 12% right now. If Kathy just owned all of NVIDIA, she'd be just fine. She'd be up 70%. Okay, what has she won? Absolutely nothing. That stock's still investing in like Zoom. It's only down 12%. Anyway, I figured that's worth mentioning. So in a few minutes, I will bring on the professor. Jeff Bierman will be joining us at some point in the near future. Bierman, maybe. Okay, maybe. His topic today is quite demonic. It's the naked and the dead ramifications of unhedged positions in high octane stocks, part two. The hell does that mean? Okay. I just really, I don't really, ask too many questions. It's Bierman. Okay. I shouldn't ask any questions either because, well, it's Bierman. Okay. Paul was saying the Wall Street Journal article. Paul, you had me until you said Wall Street Journal article. I am telling everybody in here, if you are reading any of the financial media, which I read everything. I really do. I read everything, especially on the weekends, like bored. Okay. It's not the market's not open, the when it's game time for the kids, I'll play for like an hour, but then I, move over and start reading stuff. But I'll read a ton of stuff, and it's so bad right now. The writing, it's so bad. Like I really have this feeling like they can't get anybody other than people that are right out of school. They don't have finance degrees. There's nothing good at a mainstream. Like I'm seeing better stuff, okay, in places like Zero Hedge and like Twitter feeds and so forth. Um, some of the AI stuff is garbage now. I even I used to look at like Benzinga, done. Okay. It's all AI garbage. And everybody, it's a theme on the same stuff. But I used to look at Bespoke. Honestly, Arnie was asking me about Bespoke. I haven't actually looked at Bespoke in a long time. Okay. Um, Bespoke. Yeah. Yeah. Zero hedges. I know some of the people that have written there for years. We actually had one of the Tyler Durdens that worked for us for a while, writing. He actually is still really good. He's out there. Okay, there you go. Rest of the XLF is starting to fill. And as I said earlier, okay, don't fade the expected move. Okay, don't fade this. I said it here. I said it here. We're too close. I definitely said it here, and I'm saying it here. We're coming home. Okay. Doesn't matter what your levels happen to be. There's only one level that's going to matter. Okay. And you know why this level matters? Because there's billions of dollars driving us to that. And that's the thing that people don't recognize about expected move. He drew a line on the screen. Okay. This is not me. This is the marketplace. We're just using an averaging model to figure out where the marketplace is pegging. Okay. So you're going to come up, you're going to come over, but your day is going to sit right in this neighborhood here. So we're home. All right. So on a bounce back, we have an upper edge of expected move we are going to hit unequivocally. Now we're going to hit it, right? So we're going to hit the edge of the expected move. That should calm volatility down to some degree. This is where I would think you would see a vol crush, but it's not there yet. So things could still be a little bit squirrely as this day kind of progresses. With that, so somebody said they filled at 84 cents. I have not filled at 84 cents. Okay, I'll cancel replace at 84 cents too. But see, now the contract size is coming in. As I said, we should see between 2 to 5,000 contracts per strike, and it's just really variable. But there's 2,000 lot. You know what's fun about this too is we'll start to cause the sizzle index to move in this. It has not updated this yet. Okay, but the put sizzle, okay, is going to start to move because the number of puts trading in here. I mean, we're doing 4,000 of this, and I guarantee you this is catching attention of a lot of traders. I enjoy doing that. I really do. Catches their attention. I've seen stuff that we've done here at Theo be talked about, like on CNBC. I do enjoy that, where we actually do a trade and they're like, there's unusual activity on such and such. And I'm like, that's us. Anyway, I haven't watched any of that crap either. With that, stay tuned. You have the Professor Jeff Bierman's coming on here momentarily. Look for the upper edge of the expected move to be hit. And by the way, it's required. It's required over here. You have to wait for it. Wait for it. You have to start screaming, we're home. Stay tuned. Jeff Bierman's coming on.